You've probably heard that investing is the key to building wealth, right? But what if I told you that most new investors end up making a mistake that could cost them $10,000 or more in the first few years, and no one is warning you about it? Today, I'm going to break down exactly what this mistake is, why it happens, and how you can fix it before it drains your bank account. I'm talking about a real avoidable error that even people who read a lot of finance blogs and watch all the tutorials still fall for. Stick with me, because by the end of this video, you will know exactly how to protect your money and grow it faster than most beginners ever will. And before we dive in, make sure you hit that like button and subscribe to The Hidden Guy if you haven't already. You don't want to miss any of the financial secrets we share here. Let's start with why this mistake happens. When most people begin investing, they're excited, full of hope, and they want to see quick results. They think, I'll just throw money into stocks or crypto or some hot new fund, and I'll make a fortune. The problem is, they're looking at investing like gambling. They're chasing returns without understanding risk, timing, or strategy. They're focusing on the wrong things. Flashy growth numbers, social media hype, and stories about someone turning $1,000 into $50,000 overnight. The reality is very different, and this is where the $10,000 mistake comes in. The mistake is simple to describe, but devastating if ignored. Most new investors either buy the wrong investment too early, or panic sell when things don't go as planned. Let me give you a story. Imagine Nate, a regular guy just like you and me. He read about a trending stock, poured $5,000 into it, because everyone online was saying it would double in months, and then watched the stock tank the very next week. Panic set in, fear took over, and he sold at a massive loss. Now, that's just one half of the story. The other half is the opportunity cost. If he had stayed calm and chosen the right strategy, that $5,000 could have grown into $15,000 or $20,000 over a few years. That's the kind of difference this one mistake makes. And don't worry, by the end of this video, I'll tell you exactly how to avoid Nate's trap. Here's why this mistake is so common. Most beginners have the urgency problem. OG John, one of the sharpest voices in finance today, calls it the rush to action without clarity. You feel pressure to act because you're scared of missing out, or FOMO kicks in when you see your friends or strangers online making money. Combine that with Nate's approach of ignoring fundamentals, and you get the perfect storm for a $10,000 mistake. It's not about stupidity, it's about psychology. Human beings are wired to react to urgency, not strategy. That is why even smart people can blow thousands in weeks if they don't know what they were doing. So, how do you fix it? Step one is education, but not the kind where you just read headlines or listen to social media hype. You need to understand your investments, what makes them valuable, and what the realistic timelines are. For example, if you invest in a company stock, look at earnings, growth, debt, and market trends. Don't just listen to the influencer saying it's going to 10x. Step two is having a plan before you invest a single dollar. Decide how much risk you're willing to take. Set realistic goals and write down what success looks like. This simple habit separates investors who lose $10,000 from those who make steady gains over time. Now, here's a little-known strategy that Nate learned the hard way: the power of diversification. Don't put all your eggs in one basket, even if it looks tempting. Spread your investments across different sectors, industries, or asset classes. Stocks, bonds, index funds, even some alternative assets can work together to reduce risk. This is the exact opposite of what new investors do when they chase the hot tips from a YouTube comment or TikTok video. If Nate had diversified just a little, he would have avoided a huge chunk of his losses. And this isn't just theory. This is how the wealthiest investors protect themselves while growing their portfolios. Next, let's talk about emotional discipline. This is where OG John's urgency advice comes in. Most beginners react to the market. They don't act on a plan. They panic when prices drop. They celebrate too early when prices rise. But the markets don't care about your emotions. And reacting impulsively is how you make the $10,000 mistake. The Hidden Guy always emphasizes this. Your brain can trick you into selling at the worst time. The fix? Have a rules-based approach. For example, decide in advance at what price you'll sell, or how much of a drop you're willing to tolerate before reassessing. Then, stick to it. Easier said than done, I know, but discipline beats panic every time. Here's another subtle trap that people don't talk about enough. High fees and unnecessary expenses. And when you're starting out, it is tempting to go with that flashy fund or commission-heavy broker because it seems like they know better. But these fees eat away at your returns quietly. Over a few years, they can easily cost you thousands, sometimes more than the mistakes you make by buying or selling the wrong asset. Nate learned this too, and it was painful. The Hidden Guy always recommends low-cost index funds or ETFs for beginners. They give you market exposure without bleeding your profits to fees, and they work for almost any strategy you have in mind. Another tip that makes a huge difference is patience with compounding. You may hear this all the time, but few new investors truly understand it. Money grows faster the longer you leave it alone. That's why panic selling is so deadly. Every premature exit steals compounding potential. Nate S.'s initial $5,000 loss could have turned into a $20,000 gain if he simply held on and ignored short-term noise. Trust me, watching the market fluctuate day to day is tough, but letting your money work quietly in the background is how wealth is really built. Now, let's bring it all together. To avoid the $10,000 mistake, you need a three-part approach. First, educate yourself and have a clear plan. Second, diversify and keep your emotions in check. Third, minimize fees and let compounding do its magic. That's it. It sounds simple, but execution is everything. And remember, even small, consistent actions matter. Investing isn't about getting rich overnight. It's about avoiding catastrophic mistakes while steadily growing your money. Nate learned this, OG John preaches this, and the Hidden Guy shows you the way every week. Before I wrap up, here's one last piece of advice. Track your progress and adjust. Don't react. Keep a simple spreadsheet, monitor your portfolio monthly, and make changes only when your strategy or life circumstances change. Don't chase the next hype. Don't sell out of fear. Treat investing like a marathon, not a sprint, and you'll avoid losses that most beginners can't recover from. If you got value from this, I want to hear from you. Comment below with the biggest investing mistake you've made or want to avoid, and share this video with a friend who's thinking about starting their investment journey. Hitting like and subscribing to The Hidden Guy really helps us create more content that actually makes a difference in your financial life. Remember, avoiding that $10,000 mistake isn't just about money. It's about learning habits that will compound into wealth and freedom over time. So take a deep breath, stay disciplined, and start investing with a plan. Don't let urgency or hype steal your money. If you follow these steps, your financial future will look very different from most beginners out there. Thanks for watching, and I'll see you in the next video on The Hidden Guy.